Good morning, everyone. You're watching Businessworld Live. I'm Danny Laurel. It's 9:35 a.m. this Thursday morning here in Metro Manila. We are about 5 minutes into this trading day. Let's let markets percolate and go straight to our top story. Foreign direct investments recovered in the month of May. That's turning around 3 months of a decline amid the COVID-19 pandemic. You can see on your screens here data from the Banco Central showed net inflow surged to $399 million. That's from $280 million 1 year ago. It was also a 28% hike from April's $311 million. Now, despite this, year-to-date FDI inflows declined by a fourth to $2.38 billion. The Banco Central says the stronger performance in the month of May was on account of increase in non-residents' net investments in equity capital and debt papers. AIM economist John Paulo Rivera says the rebound could be due to the delayed effects of FDI inflows in 2019. He also notes that there were alternative locations for FDIs, explaining that not all investments settled in COVID-19 hard-hit areas such as the NCR. Union Bank chief economist Carlos Asuncion says the higher FDIs in May could lift investor sentiment. That's amid the country's ongoing fight with the virus. Meanwhile, the government has already exceeded its customs revenue goal for the month of August. The BOC collected 44.6 billion pesos. That's compared to its target of 33.7 billion pesos. Unemployment, however, rose to 10% in the month of July, but that is from 5.4% 1 year ago. This means the number of Filipinos who have no jobs have increased by 2.1 million to 4.6 million. However, this July figure is lower by 2.7 million from the month of April, when the country registered a record high unemployment rate of 17.7%. Underemployment is up to 17.3% from 13.6% in July 2019, but is lower than the 18.9% registered in the month of April. Kicking off the markets with a quick health check on our currency. We are weakening a touch, but nevertheless still rather strong. So we're at 48.568 to the greenback. Recall that we had actually hit 48.4 levels. We are recovering a touch actually after we had dropped to a 1 week low. That's on the back of a foreign funds selling our stocks for a 10th consecutive day, at least yesterday. Another thing that happened that may have also weakened the peso, the dollar is rather strong right now. That's versus most of the emerging Asian currencies. That's after the US came out with their PMI index showing that manufacturing had risen to the fastest pace since 2018. So just highlighting that the US manufacturing activity increased more than analysts had expected in the month of August. New orders in terms of their manufacturing surged to the highest level in over 16 and a half years. But still, employment at the factories continued to lag. That's amid, of course, all the safety restrictions for slowing the COVID-19 spread. This is according to Reuters. Now, Mike Ricafort of RCBC saying that the peso was weaker yesterday. That's after another thing that happened over in the US, a revival of talks on the stimulus measures. That's between the Democrats and the Republicans, which were delayed last month. Recall that President Donald Trump is willing to sign a $1.3 trillion coronavirus relief bill. This is according to a top 8 on Friday, reported over by Reuters. So a lot to be watching out for here in terms of dollar strength, which does affect how strong our peso is. Let's take a step back and take a look at how Wall Street had performed overnight. You can see another euphoric day with the Dow Jones hitting gains of 1.6%, the S&P 500 following suit, the Nasdaq as well continuing that rally. This amid the rest of the global stocks also enjoying a rally. You've got major indices at record highs. This, according to some traders surveyed by Bloomberg, there's going to be a flood of liquidity unleashed by the central banks that will be making its way into equity markets, and traders are betting on that. There's also been a rotation away from the tech giants. So recall that the entire week has seen tech titans just gain and lift the Nasdaq up, but that has actually been rotating away from them. And this might actually signal confidence into not just tech shares, but also a broader economic recovery. Another thing that is driving this sentiment is the US CDC. So that's the Centers for Disease Control, telling the states to prepare for a COVID-19 vaccine to be ready by November 1st. So this is a rather aggressive goal, suggesting availability of a vaccine just before the presidential election over in November. Now, if you take a look at Asia Pacific, traders, or at least futures, were showing that this might be opening in the green. We can see a rather mixed picture here, but more or less tilted towards the upside. You can see over in Japan, the Topix up by 0.4%, the Nikkei 225 as well, enjoying some hefty gains there. Shenzhen, however, in Shanghai as well as Hong Kong, feeling a bit of pain here as the Kospi also surges more than 1.1%. Meanwhile, over in the Philippines, we had actually reported 2,280 new COVID-19 cases yesterday. That's the bad news. The good news, however, is this is the fewest in more than 1 month. And this is, of course, according to the health department. Let's take a quick peek at how our own equities are opening this morning. We're 10 minutes into the trading day, opening on the stronger foot here, up by 0.1%, 5744.59. We're nevertheless still at 5,700 levels. This after the index had sank 2.5% just yesterday. Our index has lost 13% in 9 straight days of a decline. We've seen the longest losing streak since 2013. So perhaps it's time for some bargain hunting this Thursday. This amid overseas investors pulling out for an 11th straight day. We lost around $34 million worth of stocks on Wednesday's trade. That was the most we've lost from our foreigners in 16 sessions. But as I mentioned, this according to Chris Mangon of AAA Equities, the PSEI is due for a technical bounce. He is seeing a support at 5,690. So we're actually approaching that. And he believes that despite the fact that general investor sentiment is extremely cautious, prices are now at a 10 to 15% discount from our June highs. We might actually be seeing some bargain hunting. But this, according to Lex Azurin of AB Cap, market sentiment is still weak. The prevailing view is still that a recovery would take longer. Now, let's take a quick peek at some sectors here and which ones are bringing our boards above water. You can see industrials leading the charge here, up by 0.8%. But property is also staging a rebound. It's up by 0.7%. In fact, it's only holding firms that are sitting out this reversal, so to speak. Holding firms are still being sold off. That's down by 0.2% in the first 10 minutes of trade. Let's take a quick peek at properties because there's a bunch of news related to this sector, especially yesterday, as that was the one dragging down the index. What we saw yesterday was that one of our biggest players, Ayala Land, felt the pain. It was actually bringing the index, or it brought half of the losses of the index down. And this, according to Chris Mangon of AAA, Ali is seen to be taking a bigger hit compared to its rival SM Prime because of the fact that the mall segment solely relies on rental leases instead of SM Prime, which actually owns department stores and supermarkets. So this was the most traded stock of yesterday. And apart from feeling the pain yesterday, it has seen losses for 11 straight trading sessions. But you can see on my terminal here how Ayala Land is trying its best to recover. It's now up by 0.6%, possibly some bargain hunters there picking up that stock. Nevertheless, you can see other players here. Robinson's Land, for instance, in the green, up by 0.9%. 89.90 is also up by 4.7%. SM Prime as well feeling a bit of a recovery. Now, I do want to focus as well this morning on the banks. A lot of news here in terms of the proposed FIST bill that is now up for debate. And this, according to the Bankers Association of the Philippines, if this proposed SPV bill does happen, they expect this, according to Cesar Consing, who is the president of the Bankers Association of the Philippines, it might free up to 3 trillion pesos for additional lending. That is if the industry is able to dispose of at least 40% of non-performing loans. So if they dispose around 40%, that's about 400 billion pesos of these loans that could be sold under the FIS law. This could actually release some liquidity. So what is this FIS law in a nutshell? The banks are able to sell non-performing assets to asset management companies. These asset management companies specialize in resolving these distressed assets and will actually be able to sell these and turn around a profit and have some fiscal incentives if they are able to sell this. Now, this according to the finance department, because of the fiscal incentives from these asset management companies, the government will actually lose around 13 billion pesos in annual foregone revenues in the next 5 years because of the fact that there will be these tax perks for the banks. But this, according to Finance Secretary Sonny Dominguez, he believes that the economic benefits of that will outweigh the fiscal collection of doing so. So still pushing for that. Nevertheless, the Senate has actually been warned of a slow recovery if this bill gets delayed. So economic managers are pressing the Senate on the urgency of this, saying that during the Asian financial crisis of 1997, this same law was enacted 5 years later. And Finance Secretary Sonny Dominguez said that was already too late. Most distressed companies had already recovered, could already meet their financial obligations. So he's pushing for this law to get in earlier so banks could have more leeway. Now, meanwhile, still speaking on the banking sector, some good news here. More banks are launching QR payment facilities. This according to the Philippine Star, who is citing the Bangko Sentral. So this according to the Bangko Central's Assistant Governor, Iluminada Sica. She said 12 more BSP financial institutions or supervised institutions are expected to launch their QR facilities this year. So there are around 20 participants now. She also said, get this, there's a 1,214% jump in the volume of QR transactions as of the end of June. So year on year. So very interesting there. They're also pushing for e-government to tap into these digital transactions and faster transactions using the QR code. There are around 180 government entities now being onboarded in the facility. That's going to be by the end of the year. Now recall that our Bangko Sentral Governor Ben Diokno has committed to raise the share of digital payments to 50% of total transactions and to have 70% of Filipinos with bank accounts by the end of his term as governor in 2023. So more markets later on in the broadcast. Okay, let me check in on some of the biggest headlines we are watching this Thursday morning. Just scrolling down here. Government debt rose 1.2% to 9 trillion pesos. That's as of the end of July. That's on the back of increased borrowings to fund the COVID-19 response. You can see on your screens here data from the Bureau of Treasury showed debt portfolio was up 18% from the end of December last year, which settled at 7.7 trillion pesos. Now, more than half of the total government debt was sourced domestically, while at least 30% came from external sources. Domestic debt has since climbed 22% or 1 trillion pesos higher since the start of the year. Outstanding government securities and external debt stock also inched up in the month of July. Offshore bond issuances, meanwhile, were slightly down from a month ago, but higher year on year. The Bureau of Treasury said that despite a strong peso, debt stock rose due to the appreciation of third currency denominated external loans. The government plans to borrow 3 trillion pesos this year to plug its budget deficit with a borrowing mix in favor of domestic sources. The Philippines ranked 50th out of 131 countries in this year's Global Innovation Index. This is the highest rank the Philippines has reached so far in the annual index, leaping 4 notches from last year's spot. The index also showed that the Philippines has become one of 4 Asian countries showing the biggest improvements in terms of innovation. That's along with China, Vietnam, and India. The report said the Philippines improved the most in market sophistication, ranking 86th. Innovation input, meanwhile, jumped 6 places to 70th, while innovation output climbed 1 spot to 41st. In terms of weakness, however, the Philippines ranked 104th in regulatory environment as the cost of redundancy dismissal puts the country at 113th. Topping the Innovation Index 2020, which was prepared by Cornell University, INSEAD, and the World Intellectual Property Organization, are Switzerland, Sweden, the United States, the UK, and the Netherlands, respectively. Now, the Agriculture Department is banking on the potential of young farmers to pave the way for the industry's modernization. The agency says they will provide assistance to young farmers through Kaya, or the Capital Access for Young Agripreneurs Loan Program, which can provide capital to both current and startup businesses. Kaya is targeted at borrowers who are 18 to 30 years old. The program provides up to 500,000 pesos at zero interest and no collateral, payable over 5 years. Agriculture Secretary William Dar notes that the youth will have to take the lead in agriculture, as they can be key players in ensuring affordability and availability of food supply in the country. Now, aside from Kaya, the DA also cited the Business Incubation in Agriculture program, which hopes to guide micro and small enterprises, cooperatives, and associations through the starting phase of their operations. Property players have felt endless pain in their operations and in their market value. How can smaller players enter the game in this period and harness unique opportunities? Here to share with us the mausoleums game plan, we have with us Chief Development Officer Cary Lagdameo. Good morning, sir, and welcome to the broadcast.
Hi, good morning, Danny, and thank you for having me on your show.
Sir, I had reported earlier on that property players have been feeling the pinch here, but you guys are saying that despite all of these difficulties that our country is facing, you have remained resilient over in the South. Give us and our viewers here a brief overview of the mausoleum and how you guys are playing and taking advantage of some opportunities in this time.
Okay, well, thanks, Danny, and thanks for allowing me to explain a little bit about our company. The mausoleum, we're part of a larger conglomerate based in Mindanao, or in Davao City in particular, called the Antlucor Group. We're more well known for our agricultural businesses, port operations, manufacturing, and even resort operations. So real estate is actually one of the newer businesses in the group. But what we take pride in is that we're a full-scale real estate company. So we have interest in residential development, commercial development. We have industrial parks, we have business parks, and we even have agro-tourism. So one thing that we pride ourselves on is really that we are a Mindanao development company. And so, wherever we see interesting opportunities within the region, and especially in the Davao region, that's where we like to invest in. And so we're quite optimistic about the prospects for our business moving forward. As you said, yes, the property sector has really felt a pinch, but there are some bright spots in the real estate sector. So you really have to see all the different kinds of segments that we're in. Of course, tourism is very affected, and our hotels are very affected, but our residential projects have been resilient. And what we really like are our office buildings and our industrial parks as well. So we hear a lot from the industry experts that these particular segments are really going to see a resilience, or are going to be resilient, and we're already starting to see that as early as now.
Sir, can you give a brief overview of the breakdown of your revenue or income sources when it comes to residential, industrial, as well as commercial?
The bulk of it is still really from residential. I would say the split between residential revenue versus recurring income revenue is about 70-30. And so included in that 30% recurring income, that's where we see our offices, our warehouse leasing, and our hotels actually only make up about 10%. And so we see that the challenge sectors actually make up a smaller part of our portfolio. And so that's why luckily, we've been staying afloat and staying okay over the last couple of months.
Why do you think that the economic recovery might be, or do you think actually will be faster in the South compared to, let's say, the capital? Or why do you feel that you are in a better position having a focus in Mindanao?
Well, there have been some advantages. And of course, the whole country has been affected greatly by this pandemic. But for the most part, in Mindanao and in particular in the Davao region, we've been under a lighter quarantine classification. So we've been under either GCQ since May or MGCQ since I believe that was July. So at least businesses were able to open, businesses were able to slowly get back on track. And there hasn't been any kind of additional tightening like what happened in NCR in August. So at least we could see there's been some progress, slowly but surely. We also like the fact that a lot of companies will be looking at areas outside of Metro Manila. So in particular, the Visayas and Mindanao, and of course, Davao will be one of the recipients of additional investments moving forward. I think companies are going to start to see or going to look at what are cost-effective places to do businesses. And Davao definitely is one of those cities that will tick the box on that.
How has your strategy changed because of the pandemic? You mentioned that you're primarily focused on the residential space. Do you feel that despite the tightening pockets of consumers and the increasing non-performing loans in banks, which you have just reported, is that not going to hamper their access to liquidity and the financial sector's risk aversion in giving loans for residential properties?
That was our initial thinking, and we were pleasantly surprised to see that come, say, around May and June, that there were actually sales in the residential space, and it was higher than we expected. Of course, we were still below target, but we were pleased to see that people were still spending on real estate, and they're still seeing that it's a good investment. And at the end of the day, people are going to need homes to live in. People are going to need, or offices are going to, sorry, companies are going to need offices to operate in, and factories will need land to put their operations on. So we see that long-term real estate is going to be very resilient. And what was good for our residential buyers is that financing is very low, as we all know. Even Pag-ibig financing is at an all-time low. So those credit-worthy borrowers, I mean, we were trying to encourage them to borrow today because rates are at an all-time low.
Okay, let's talk about the demand for warehouses over in Davao. It's one of the hotspots, actually. You've got Laguna, you've got Bulacan, and you've got Davao. How has that demand changed now because of the pandemic and a lot of businesses actually shifting into logistics and warehousing, e-commerce booming? Are you feeling that flock towards Davao, and how has your facilities actually coped with that?
Well, for us, we've definitely seen an uptick in inquiries. We still are working on closing some of the deals, but we haven't seen this many inquiries for warehousing space and space for logistics companies in a very long time, or actually I would say ever. We're in advanced stages with some of these logistics companies, and we're hoping to close something hopefully within this month or by next month. What is good is that we actually have the facilities to offer would-be investors. We positioned ourselves quite well, I would say, over the last couple of years. Like in the industrial park, we have about roughly over 20,000 square meters of warehouse space. About half of that is already taken up, but we still have enough office or warehouse space to offer investors should they be really looking at Mindanao to locate their business.
Okay, and finally, just to focus on the commercial property space, because you still mentioned that offices will still, go on. So after this pandemic, you probably will still see people going back to the normal offices. Do you believe that's the case, or are you positioning for a new normal in work wherein people will be working from their homes, as you mentioned, maybe investing more in residential spaces rather than commercial, or are you still sticking to your guns in developing townships?
Personally, we feel that, work from home is still going to be used moving forward, but it's not going to be the norm. I don't think that you'll see 100% of offices going work from home. There's probably going to be a split. In our case, we've been working under a 50-50 split, and I think this is something that's doable moving forward. I mean, there are businesses such as BPOs, I think, that will have a hard time doing the work from home setup. Even multinational companies will still want to have a presence in a large office footprint. Maybe the number or the amount of square meters will be taken up, or that will be taken up, will be a bit less. But we think that offices will be here for the long run, especially flexible workspace. We were also one of the pioneers for flexible workspace in Davao, And so that's something that we'll continue to be putting in our permanent offices as well. So we think that in the next year or two, we'll continue to see an uptick in office take up.
And what's your new normal going to be looking like in the Mosaland? Have you, pivoted in certain areas? A lot of companies have gone online when it comes to showing the
Yeah.
real estate, etc. Give us a bit of a feel of what the new normal is going to be looking like and how quickly you see a rebound happening, not just in the Mosaland, but in the sector in general.
Yeah, I think just like many other companies, we had to make that digital pivot or that digital transition. And, we have been looking at this, we had been slowly doing it over the last few years, but just like other companies, we went into, we went into overdrive when getting our businesses online and doing our selling online. And so since April, we made a conscious effort to really do most of our sales and marketing online. And even a lot of our internal processes are now being done through apps and being done through online processes. So I think that's something that will be the new normal. And I think this is something that will allow companies to be resilient and to be successful moving forward. I mean, one thing that we saw was that there was really an uptick in inquiries for all of our products from our residential to commercial to industrial spaces because we were now online and now we were reaching rather than say tens and hundreds of people, now it's into the thousands, into the hundreds of thousands of people.
Okay, so just a temporary pain here, but moving forward, still very promising figures here when it comes to the residential sector and even the return to the normal or the new normal as per Carrie Lagdameo. Thank you so much for joining us this morning, sir.
Thank you, Danny. Thank you for having me.
And that's a first look into the business day. Today is September 3rd, 2020. Catch us again tomorrow morning, 9:30 a.m. I'm Danny Laurel and we are One News.